Welcome back to another coffee chat with Tiaan Herselman, Head of Advice and Proposition for Old Mutual Wealth, where today we start looking at trends, the trend of generational wealth in the market, and why is it so important for financial planners to take cognizance of this. Now, Tiaan, you've been around the country, you have your finger on the pulse in terms of trends, whether it be investment trends, advice, or funds for that matter. But there is this trend out there that everybody's talking about around generational wealth and the wealth transfer. Give us a little bit more detail in terms of the data and the stats around that.
Yeah, so one of the topics, Dave, a lot of financial planners wanted to learn more about was this wealth transfer. And being a millennial myself, I thought I'd take a millennial's perspective, delve into the topic a bit more, because us millennials now are no longer the young kids on the block. Somewhere in one of our roadshows, somebody said to me, Uncle Tiaan, can I ask you a question? Which caused me to cut my hair a little bit shorter on the sides. But I think the big trend we're seeing is that in 20 years from now, millennials who are now aged 28 to 42, we are no longer the young kids on the block. We'll look after 60% of global wealth. In the SA context, 1 in 2 millennials are expecting, the FBI found, an inheritance. 1 in 3 are expecting that to occur in the next 5 years. And of those expecting it in the next 5 years, 1 in 5 expect it to be more than 5 million rand. And the good opportunity for financial planners, but also for millennials, is that the FBI found that 4 out of 5 of these millennials that don't currently use financial planners are actually quite open to speaking to a financial planner, paying a fee for getting the right advice.
Yes, I guess, Tiaan, I haven't really thought about it, but it does stand to reason that you had the silent generation who were wealth accumulators. You had the baby boomers who then, were in the 80s when markets were really, really running. And it stands to reason from a macro perspective that that wealth needs to now transfer to their adult children as well as their beneficiaries. You talk about 60 trillion or 80 trillion currently within the US market, of which 16 trillion is probably going to be unlocked in the next 10 years. So it's obviously something that planners do need to sit up and take notice of. But this generation is slightly different. They've come through COVID. They've gone through the benefits of AI. They've seen the rise of AI. How does this generation approach investing?
Yeah, I think it's nice to remember that we were one of the first generations, again, talking about millennials, that actually experienced the cell phone generation. I remember one of the biggest things that blew my mind was not just having a Nokia 3310 that was indestructible. It was when Snake became Snake 2 and they took away, the Snake could go through the wall. It completely blew my mind. But when looking at how millennials in the SA context invest, it's quite interesting. The first thing you see in our South African context is that the bulk of our capital is actually in cash, about 70 odd percent. 16% in retirement funds, and then about 30% is in tax-free savings accounts. But the one trend we're seeing more and more with millennials, wanting diversification, is they're actually sending money directly offshore. So it's not just investing on the local platform, investing into an offshore fund, the money's actually leaving the country. That's the one big trend. The other one is, how do we feel about going green? Now, contrary to our UK and US counterparts, millennials in South Africa are actually quite big on green, but not as big as you might think. So 60% of millennials said that they prefer to invest with companies that look at things such as social responsibility, that look at the environment. But something that was quite telling to me was when they asked them the question, they gave them a statement and they said, I don't mind going green irrespective of the cost. They thought that most millennials would say in SA, yeah, no, I'm happy to pay a bit more investing into green companies or into green investment solutions. What they found was that only 1 out of 4 millennials actually disagreed with that statement in South Africa, meaning that cost is more important for millennials than investing green. So we're almost looking for the balance between investing into ESG solutions, but also making sure the costs are quite low. I think that's quite important also to note. I think the last trend that we picked up is that millennials spend 4 hours and more on social media. You might think, well, why is that important for me in this particular talk of ours? Well, the one thing about social media is that there's a lot of content being created on finance, this new wave of Finfluencers. So much so that the 10 biggest investment providers in the world have 10 million followers. These are your Vanguards, your BlackRocks, and they've got the biggest marketing budgets in the world. The 10 biggest Finfluencers have 64 million followers. And an interesting study done by the Swiss found that they looked at a platform called StockTwits, which is a platform where you can give investing tips or kind of give your views on investing, and people can then pay or follow. And they analyzed 70 million tweets on the platform, and they found that 60% of the tweets or the recommendations given to people following the platform would have actually helped you or caused you to underperform the market by about 2%. In fact, if you did the opposite of what 60%, it's about 56% of the tweets told you, you would have outperformed the market. So again, for millennials, we like going green. Cost is a big factor, a lot of money in cash, so probably not very tax efficient. Offshore is a big theme, and we are listening much more to what's happening on social media, albeit not always for our own benefit.
Now, Tiaan, as usual, you tend to make it very practical for financial planners. And if we bring it back to an African context, the generational wealth transfer happens slightly quicker in Asia and Africa, as opposed to first world countries, which happens over 3 or 4 generations, whereas Africa and Asia more in 1 generation. So that means that investments need to be done and structured a lot quicker. What are the themes that financial planners can take in order to service this generation?
Yeah, so we've tried to group all of the research in 5 particular points. The first one is the obvious one, using technology, and there's so many options out there. Two that we think are quite good is Asset Map, where you can show the entire family all of their holdings for the family, trusts, various entities, on one slide visually. You can have a conversation around that. The second one is our flagship financial planning tool, the Wealth Integrator, where we've now had an amazing enhancement where we can even show you how you can calculate the shortfall for a millennial if there is a shortfall in their financial plan upon them passing away or even upon becoming disabled. The second one is more and more we're seeing millennials wanting to communicate differently. The number one platform from social media perspective in our country is still WhatsApp. A growing platform is TikTok, and we've seen some financial planners really do well in communicating to the younger audience, not just to the audience out there, but actually beneficiaries of their kids, beneficiaries of their clients. The third one is building generational wealth. Now, we still think the tax-free savings account is a fabulous vehicle for doing this. Just some rough numbers, please don't hold me to it. But if you assume 11% return, 5% inflation, and you start contributing the day your first child is born, and you want to build generational wealth, at about age 18, you're looking at a figure of roughly 1.2 million. If you can leave it till 25, becomes almost 2 million. All of these figures in today's money. And then if they were to leave it till age 60, possibly retirement, there'd be 17 million. The fourth one is more and more we are seeing the need for fiduciary expertise because, yes, wealth is being transferred. So you want to have fiduciary specialists that you can have through our private client solution to help you look at the will, look at the estate planning, look at the trust structures, but also looking at the trend of where we're seeing more millennials investing directly offshore and more clients looking at what structures are in place from an investment perspective to look at things such as situs tax, which is a tax levied offshore at 40%. Will your local will suffice? What about capital gains tax? Could we eliminate that? Could we reduce the tax rate? So that's where our Old Mutual International structure for SA tax residents and beneficiaries are very lucrative. And the last one is there's 3 themes that keep on popping up with millennials and clients. They want investment solutions that are low cost and reliable, and they want something that's diversified and bespoke and personalized. And very quickly, on the low cost and reliable, on a local platform, we have our core range, targets inflation plus 2 to 3, 3 to 4, 4 to 5, comes in at roughly 0.5%. And then it's beaten 50 to 75 of its peers over 1, 3, and 5 years. If you want diversified, you don't want just the old mutual green, you can still use our research and investment management capabilities, but we use best of breed asset managers when putting together our DFM, discretionary fund management solutions. And lastly, if you want bespoke and something truly personalized for you, we have a whole range of portfolio managers that can put together a portfolio for your millennial client or one of your clients, whereby we can build a custom portfolio customized to a millennial's beliefs that's personalized to them, whether it be direct stocks, ETFs that they are quite enjoy, or even any other bonds or any other securities that might be relevant to that portfolio. And those are our 5 key takeouts for dealing with generational wealth, but also help building it in a practice.
Thanks, Tiaan. Well, there you have it. How to deal with generation windfall and how to best structure your practice to take advantage of this and give longevity to your business. Join us again for another Old Mutual Wealth Debrief Exchange.